U.S. equities rallied today, softening weekly losses as Wall Street bets on further stimulus from central banks. Benchmarks ended a choppy trading session almost unchanged as we narrowly avoided a market correction. Here's how they ended on the week. The Dow closed down 1% to settle at 16,380. The Nasdaq slid back just under 0.5%, closing at 4258, and the S&P 500 lost 1% to end at 1887. The government announced that the deficit for this year's budget was $483 billion. The deficit equaled 2.8% of gross domestic product. The GDP is the economy's total output of goods and services. This is the lowest deficit of President Barack Obama's 6 years in office. This deficit reached over $1 trillion for each of his first 4 years in office. Analysts claim the lower shortfall was due to slower growth in government spending and increased tax revenues. The stock market can sometimes be driven by emotion, especially for individual investors. The Ebola virus was not the main driver of market volatility this week. Wall Street is more concerned with the deteriorating economic outlook in the Eurozone and the new gains by ISIS in Iraq. The recent volatility has many investors worried about their retirement savings and wondering what to do. It's not a good idea to make decisions based on short-term market movements, or it could derail your long-term plans. This is a good time for investors to review their risk tolerance and goals with their financial advisor. That's your market report for the week. I'm Bruce Hearon. Have a great weekend.